So the next speaker, I can honestly say, is one of the most hardworking and knowledgeable thought leaders in the industry. A previous colleague of mine from Nordea and a very close friend of Copenhagen FinTech. A jack of all trades in FinTech and just a very decent guy. Crespo is asking the question, will Asia lead the way in 2030? Go ahead, Chris.
Thank you. Earlier this year, my wife and I found ourselves with a little bit of extra time in our hands, and we decided to go traveling to Asia. Now, we've always enjoyed traveling in Asia, but this time we thought, well, let's go for a long time. So at this point, we decided to head over to buy our tickets, pack our bags, and we headed over to Asia to become digital nomads. Our plan was initially, okay, something's happening here. So can we go to the next slide, please? Our plan was initially to spend 1 month at a time in each one of the countries that you see in the slide that's coming up next. Anytime now. There we go. So our plan was to spend 1 month at a time in each one of these countries. We thought one month will give us the opportunity to really embed ourselves in the culture, but also it will give us the opportunity to live in and experience the cultures in each one of these countries. So the first place we went to was Thailand. We spent a whole month in Bangkok. We rented an apartment, and that was really a fantastic experience and an opportunity for us to get to grips with the culture, to understand how society works, but also we were able to see the enormous reliance that people have in new technologies. So armed with the experience we had from Thailand, we headed off to our next destination, which was Vietnam. We got to Vietnam, and 2 weeks into our arrival in Vietnam, the world went into chaos. The pandemic struck, and just before we knew it, the borders shut down. So that meant that not only we could not go to all the other countries that we had initially planned to go, but also the fact that we couldn't get back home. And because we were traveling on a one-way ticket, the insurance refused to cover our repatriation flights. We did try to get back home. In fact, we bought 3 different tickets that will take us back, but systematically, one after one, they were being canceled. So at that point, I turned to my wife and I said, what should we do? And then she was like, well, you know, it's warm here. We have the beach next door, and the lockdowns don't seem to be so severe. So let's just stay here and weather the whole thing off. At the end, we ended up staying in Vietnam for 5 months. And those 5 months really gave us the opportunity to learn and to get to grips with what society was doing with culture. And most importantly, we had to start using the same technology tools that society uses at large to go about their everyday life. So today I want to tell you 3 stories. 3 stories of companies that are making disruptive waves across banking and across other industries in Asia. But before I do that, let's set a little bit of context. Up until 2010, the West had led the world in finance in terms of growth and innovation, right? But since then, the scales have actually shifted, and it is now Asia who is leading the world when it comes to financial innovation. And they're doing this based on 3 axioms. The first one, Asian people are extremely digitally savvy. They're very good with technology, and we sort of instinctively know this because our technology has always been designed, manufactured, and in large part consumed by Asian countries. The second axiom is that the population in Asian countries is comparatively very young. Consider the fact that all across Asia, there's a median age of 32 years of age. In Europe, the median age is 43, and in North America is 38. So this means that a very large proportion of the population in Asia falls within the millennial and the Generation Z demographics. Now this means that this is a generation that grew up using technology, so very, very technically savvy and very young. The third axiom is that people in Asia are very quick at adopting technology. If you consider the fact that the penetration rate for mobile is 133%, that means that everyone has on average more than 1 phone registered to their name. So it presents a lot of opportunities, and in fact, banks have taken advantage of this to develop new innovative services on the back of this likelihood to adopt new technologies. But it is by far, social media companies, e-commerce giants, and gig economy companies, the ones that are leading the development of new services when it comes to banking. And they're doing this by focusing on 3 main areas. They're basically bringing to the market new business models. They're building new business models on the back of digital innovation. Secondly, they're coming in with a radical different mindset. In fact, most of them are thinking, well, why do we need banks at all? What is the service that a bank provides? What is the value that banks can provide to the population? And this is radically different to the normal rhetoric that you hear within banks. And thirdly, they're coming into the market with astounding operational efficiency. In fact, they have the lowest cost-income ratio across all industries. So as you probably know, cost-income ratio is a metric that is used to measure operational efficiency in banks, and the lower the cost-income ratio is, the better. So these companies are coming into the market with a cost-income ratio between 25 and 35, when by contrast, banks have an average cost-income ratio of between 55 and 65. Now, the fact that they can operate so efficiently means that they can also reduce their price and be far more competitive than their counterparts, incumbent banks. Now, one other thing that needs to be said about Asia is that they are leading the world in the creation and the use of ecosystem economic models. And we've probably all heard about this, especially coming out of Asia, right? Out of China, right? We've heard of WeChat, we've heard of Alipay, and we've heard of how they're using this ecosystem mentality to really bring services to customers that make it extremely, extremely convenient and accessible. Now, the problem is that research shows that banks in Asia are not really taking advantage of their ecosystem partners. In fact, 80% of the top 250 banks in Asia Pacific have a very traditional view of the value chain. And that means that they want to hoard the entire value chain from end to end. It's no surprise, therefore, that business from third parties and partners only contributes to 2% of revenues in the region. Now, to make matters even worse, this predisposition that people have to adopt technologies means that people in Asia are increasingly more likely to want to bank with non-traditional players like fintechs and even non-banking players. So what you see in the map right behind me is a list of the top 21 neobanks operating in the region. Now, these banks are already way ahead in terms of flexibility, in terms of self-service, in terms of personalization, and they're bringing services to market that their competitors and incumbent banks are not able to compete with. Now, consider the fact that just last year, Hong Kong issued 8 new digital banking licenses. Taiwan issued 3. This year, Singapore is expected to issue 10 new digital banking licenses, and the Philippines and Thailand are already working in developing policies that will make it easier for digital banks to launch. So what we find is that Asia is not only good for technology, but it's a very fertile ground for the emergence of digital banking. In fact, a lot of technology companies that started off as technology platforms are now migrating over to the digital banking side. So the question we should be asking is, how is Asia leading the future in terms of financial services, and why should you care? Well, let's spend a little bit more time talking about this model of ecosystem, right? So all over Asia, we have this new breed of ecosystem players that are really focusing on embedding themselves into the daily lives of people. They're opting to go for large volume, low margin activities and really become an integral player of people's daily lives. And a great example of this is WeChat. We briefly touched on it. But WeChat basically has amassed a number of services from other companies into a single interface that makes it extremely easy for customers to access it, makes it extremely easy for customers to pay for it, and extremely convenient. Now, consider for a moment the chart that I'm showing on screen. Now, this shows how often the average user of WeChat is using WeChat services through the day. So WeChat is there the moment people in Asia wake up. Is there when they're having breakfast? Is there when they're going to work? Is there when they're at work? Is there when they're having lunch? Is there when they're having a break? Is there when they're going back home after work? Actually, the only time that WeChat doesn't really show in people's day is in the period between when they get home and when they go back to sleep. But just before they go back to bed, WeChat is there again. On average, people spend 4 hours a day using WeChat services, and this is astounding, right? The world has not really seen this in any other setting. In fact, WeChat has an average monthly usage of 1.1 billion users, which is still half of what Facebook has. But it causes us to ask, well, WeChat is already delivering services that are extremely useful for all sorts of situations in human life. What is Facebook doing about it beyond communication? Just something to think about. Now, I'm going to play a video for you in a moment. And this is basically, if you're not entirely sure what this whole concept of the super app or the concept of ecosystem players delivering their services to super app, I don't blame you, and that's mostly because in the West we still have not seen the emergence of this type of model. So have a look at this video. This is a video from a company called GoCheck, operating in Indonesia, that have managed to launch a very useful super
baby app killer. How am I super? School's in. Ready to learn some Stranger Things? Here we go. Welcome to Indonesia, the crown jewel of the East. 18,000 plus islands, but 22 billion minutes wasted in traffic. And the land of me, Gojek, super app. Me, my transport, delivery, food, repairs, massage. Ooh, nice. Payment, bills, rewards, shopping, business, you get the point. I do 100 million orders every month. Wait, what? No, yes, you heard me. 18 plus products for 261 million people. Who are you gonna call? Me. I do it all faster than you can beam Scotty. Still with me? Good. Thinker linguist, say Makasih mas to one of the largest JRuby, Java, and Go clusters in Asia. 1 in 4 Indonesians have me in their pocket, even your grandma. Every day, my riders cover 16.5 million kilometers. That's more than 21 round trips to the moon. Does your app go where no man's gone before? I didn't think so. Oh, sorry, Neil. Most importantly, 2.5 million people rely on me for their income every day. I help fill bellies, run businesses, and move an entire nation. I know. Where do I get the energy? Wait, now going to other countries too? Vietnam, Singapore, Thailand, and Philippines? You ready? Now, what were you saying? Right, you're looking for a job. Say something.
So there you have it. Now, I promised you earlier that I will tell you 3 stories about companies that are making disruptive waves across the region. But what I want to do first is tell you these stories in the context of what banks and basically what any other company can do when it comes to playing a role in this new ecosystem modality. So essentially, banks, or for that matter, any other company, can do 3 things. First of all, they could orchestrate an ecosystem. And this is the role of coordinating the various players in the ecosystem, where when the orchestrator basically plays the role of ensuring that the parties that are in the ecosystem can transact with each other with as little friction as possible, and also ensuring that they're fine-tuning their matchmaking mechanism to ensure that suppliers can find the right customers. Secondly, you have the option to participate in an ecosystem that's being created by a third party. And lastly, you can create your own ecosystem by mergers and acquisitions. That means that you provide all the services or most of the services that are accessible to the customers within that ecosystem. So let's start first by looking at DBS. DBS is a Singaporean bank, and they're notable for being named the best bank in the world. So over the years, they've won a number of awards given to them in no small part due to their digital prowess. But also they've approached banking with a very distinct mindset. They've really been questioning about how to deliver new value to their customers. And a few years ago, DBS launched what is called DBS Marketplace. Essentially, this is the orchestration of an ecosystem where what they thought, well, as a bank, we give out loans for cars and we give out mortgages. So why don't we go the extra mile and help customers find the car of their dreams or the home of the dreams? So they put all that into a marketplace, which is an ecosystem that allows customers to go find that car, find that house, and then seamlessly transition to the product that the bank offers that is going to help them acquire that. So this is perhaps a very simple but a very clear example of a company that's orchestrating an ecosystem. Let's talk about something perhaps a little bit more daring. The next example comes from South Korea. So if you haven't heard about them, you're probably not to blame. This is a company called KakaoTalk. Now, this is one of my favorite examples. KakaoTalk started as a messaging app. So you know the drill. It's a messaging app that you can use to send emojis and pictures of your breakfast to your friends and family. And what's particularly interesting about KakaoTalk is that they have 43 million customers. That is in a country that has 51 million inhabitants. Let that sink in for a minute. They own 87% of the market. They have a massive penetration. So at some point, they said, well, we have a lot of customers, so we must be doing something right. Why don't we use that capability and that understanding of our market to bring other type of services to our customers that would add value to the daily life? So as you would have done, they went and applied for a banking license. This was back in 2017. And all through the process, they kept asking themselves, why are we doing this? Do we want to make money, or why are we launching banking services? In fact, what is a bank? What's the purpose of a bank, and what is the value that the bank provides? This kind of questioning and this kind of mindset helped them really stay laser focused on ensuring that they were developing something that would bring customer value. So they got their banking license approved just before the summer of 2017. They launched what's now called Kakao Bank, which is the spin-off bank of KakaoTalk. And within 5 days of launching, they managed to capture 1 million customers. 100 days later, at the end of that quarter, they have managed to amass $3.6 billion US in deposits and to give out $3 billion on loans. This only happened in 1 quarter. At the end of that quarter, KakaoTalk had captured 43% of the personal loan market in South Korea. That is unprecedented. In fact, since February 2018, KakaoTalk became the fastest growing digital bank in the world. And they're now expanding into other areas. They're now expanding into mortgages, into wealth management. So what's really interesting is that KakaoTalk has also started to expand their portfolio of companies building this ecosystem through what's now considered Korea's super app. And Kakao Bank, which is a daughter company of KakaoTalk, is playing a role within that ecosystem. So it's a participant on the wider ecosystem. And the third example is one that's really close to my heart. And it's from a company called Grab, right? So if you've been anywhere in Southeast Asia, you would have noticed that the street is full with people riding motorcycles wearing helmets like this. And you'll be happy to know that I didn't actually steal it. I bought it. But essentially, Grab has now become the de facto super app in Southeast Asia. Grab was started as a university project by 2 students at Harvard Business School. One of the co-founders is a lady from Malaysia. The other is a guy from Singapore. And they presented this as a project in Harvard Business School. The project won 2nd place in a competition. They got $25,000 to fund the project. They went back to Singapore. And they wanted to be the first movers in the market of creating a ride-sharing company. They did this with a very localized approach. What does that mean? Well, they really understood the needs of drivers and the needs of the people in Southeast Asia. So they went in with an option that allowed people to pay using cash. Even though there's very advanced societies in Southeast Asia, cash is still king. So they allow people to pay with cash. Also, they had a wide variety of services. They had the cars, but also they had the motorcycles, which are extremely important if you want to whiz through the traffic. That is, a big problem in Southeast Asia. In 2013, Uber came into the market. And ever since, they struggled to really hit it with customers. At the same time, Grab kept growing and kept growing. But really, Grab crowned itself in 2018 when finally Uber said, I give up. And Grab agreed with Uber that they will take control of all of Southeast Asia operations of Uber. Right? So since 2019, Grab has been expanding their portfolio of services. Of course, they've gone into banking, but they've gone into banking either by partnering with companies like insurance and also acquiring other companies that give them additional capabilities like wealth management. Today, Grab offers things like personal loans, offers the micro investments, offers pay later or deferred payment options. So it's really building up on this financial services portfolio. So, just for you to get an idea, Grab is used by 190 million people in 8 countries. They operate in 330 cities across Southeast Asia. And they have a network of over 9 million merchants. So they're really, really establishing themselves as a key player and as a key enabler of everyday life in the region. So, with that said, I want to conclude by sharing a few thoughts that I have around what's really happening here. There we go. The first one is that I believe that Asia is setting the blueprint for the future of financial services based on the fact that they are disrupting culture. They are coming into the market asking the right questions and challenging all the preconceived notions about what it means to be a bank, what is the value that banks provide, and ensuring that they're able to provide services that meet demand and that provide value to people's everyday lives. They're not content to being present in live events like buying a house or getting married. They want to be relevant for activities that take place every single day. Secondly, they're creating value. And this is something that we tend to forget, but the ability to create value, the ability to create new value for customers is very different from profiting from customers because they have no other choice. And this is a distinct mindset. And finally, I think banks in the West still have a window of opportunity to foresee what's happening in Asia and start developing strategies of how they're going to participate in ecosystems and in super apps the moment they arrive. They still have the trust of the customers. They have a very high competence in terms of regulatory compliance. and they have tons of data. So I think it's time for the West to see the writing on the wall, to start developing these strategies and be prepared for when those disruptive technologies hit the West. Thank you so much, and I'll take I think we have time for questions.
We have time for questions.
There's some questions coming.
We have definitely time for questions.
Wonderful.
So, Chris, thank you so much for your presentation. One thing I'm thinking about, and you might touch upon a little bit of that already, but we've been very active in Singapore, also in Japan and other countries in Asia, and I think what we have seen is the heavy support of regulators and government, also to drive the development. Can you speak a little bit about that also? Because I think that's also what distinguishes what we see here in Europe and some other places around the world, and the heavy involvement of regulators and government.
Yeah, I think that's an extremely important question. So what I see is that in Asia, the governments have really been empowering and been facilitating the creation of new digital banks. And they've done this by creating policies that facilitate that, by really removing as much regulation as possible, still taking into consideration that they have to protect the safeguard of the institutions and also the money of the customers, but pretty much making it easier and paving the way for these companies to succeed. In contrast, what we see in other Western countries is that, well, if all you have is a hammer, everything looks like a nail, right? So regulators are there to impose rules and policy. So I think sometimes there can be too much regulation that can actually stifle development. And what we see in Asia is that regulation is being just, let's say, as much as is necessary to keep the system going, but not interfering with new developments. And I think that's a very important enabler for the development we see in Asia.
Could you speak a little bit about, because we tend to, I think, also hear from, especially the Nordics, but maybe in Europe also see Asia as one whole. Yeah. But it's at least, as we have experienced this, it's many different parts. So a little bit, what distinguishes the different parts of Asia?
So that's a very interesting question. Very often when I talk about Asia, I talk very passionately about what's happening in Asia. And most people say, well, Asia is China, and then there's a whole bunch of other countries in Southeast Asia, and maybe there's like India, and so you're right. It's a hot pot of different cultures and different requirements. But usually they use that as an excuse to say, well, okay, well that's China, and that's a completely different economic and political system. So we really shouldn't compare ourselves to them. And to some extent, I would agree with that. But what's happening is that those innovations and those, let's say, those modalities and models that started in Asia in China are now spilling over to the neighboring nations, many of which are very similar in nature to the West. Singapore is a perfect example. It's a very highly capitalistic nation, and they're starting to adopt this ecosystem model with these super app players. So I think increasingly we can say that at least some of the cultures in Southeast Asia that somehow resemble economic conditions of the West are going in a direction that is really marking a pattern for the rest of the world to follow.
So actually, there's a few questions here I will try to take now from the audience. Yeah. Mikkel is asking here, data ethics or lack of, does this play a role? What super apps are? Does this play a role for super apps that they are the norm in Asia but not in the West?
Well, so when you hear interviews about people precisely asking this question to power users of things like Grab or things like WeChat, the answer is, well, the government already knows a whole bunch of information about us. So there's not really any disadvantage. I think what the West is missing is like, well, there's still a lot of data being generated and being used and being stored in different places. But what consumers in the West have missed so far is the value that they can get from that data. So I think if you're able to offer customers, say, look, yes, we're gathering data from you. We're amassing a whole bunch of information. With your permission, we'd like to use that data to deliver value to you. And if they can do that, I think most customers will be sensible to say, well, actually, I don't really want my data to be used, so thank you very much, but no. But others might actually say, yes, if you're going to make life easier for me, if you're going to give me choices and you're going to help me on everyday activities, bring it on, right? So I think that's where the discussion needs to go to.
So last quick question here, a very interesting one actually. So Corina here is asking, do you see Southeast Asia as a leader in a role where it mostly inspires and empowers new startups in Europe or the Nordics? Or do you see those companies as leaders who might expand globally, eventually creating a global monopoly in certain areas?
Yeah, I guess that's the $1 million question, right? because from the West, we've been watching what's happening in Asia, you know, from afar, and very often we just see it as an odd thing. I would like to think that we can learn, that we can take a pill of humility, learn from areas of the world that are doing extremely well, take from them what actually works in our cultural and economic context, and develop our industry in the same way. However, I think the speed at which things are moving in Asia, I think is far more likely that we'll start seeing the incursion of Asian players into European markets rather than seeing the European markets develop fast enough to be able to match the development that we're seeing over there. I think it will depend a lot on what big tech actually ends up doing, because they're the ones that hold the data, that hold the scalability, and that hold the technological capabilities.
Chris, thank you so much.
Thank you.
We'll have to jump on in a couple of minutes. There's a panel going on, so thank you so much for coming.